Hello, everyone. Welcome back to Extra and Speed Live weekly price action based technical analysis. My own name is Sheriff Daramola, and welcoming you once again. Let's confirm before we start. Let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice very clearly without distortion, please let me know in the comment section by typing HI in the comment section. So I would like to see some feedback, please, so that we can get this started. If you can see my screen and you can hear my voice clearly, please let me know in the comment section by typing I in the comment section. All right, so what do we have here? I see some comments here. All right, so 410, good morning. Okay, 996 says, what's up? All right, what's up? What's going on? 996, okay, Seba 090, Sunstar, Nikki 74. Hello, Carrie. Good morning. 6422. Okay. Well, I'm fine. Thank you. I'm fine. Thank you. My voice is getting better, as you can see. I've been on some herbal medications and taking a lot of hot water out here, but things are going on fine. And I think before the end of the week, it should be quite better. Thank you for your concern. All right, so with this feedbacks here, I want to take this as a positive confirmation that we are good to go this morning. So I'm so excited, grateful, and thankful to be with you here as we get prepared for another promising edition on the Extra and Speed Live. So in preparation for today's New York session, I have conducted an extensive and comprehensive price action based technical analysis on all the financial assets on our watch list for this week, and I'm so excited to share with you the discoveries I have seen as I have identified simple setups using simple parameters such as trend lines, key levels, and of course chart patterns to uncover valuable insight into the historical price movements of all of these assets. So you don't want to miss out on this one. Stay tuned in so that you don't miss out on any of the insightful ideas that we shall be deliberating on today. And for those who are joining us for the first time, you are highly welcome on board. I'm always happy and glad to have newcomers in the house. And for the sake of clarity, what we simply do here is to come together in anticipation of the New York trading session, where we normally review and manage our current positions and at the same time prepare ourselves strategically for the New York session. So this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And one thing I would like to state here before I go further is that you want to be part of the session through and the subsequent session, as the more time you spend with us, the better you become in understanding how things works here, and eventually use the information you have gathered here to make an independent trading decision on your own account. So once again, you are highly welcome on board. So with that being said, here we are going to be diving right into the economic calendar. And of course, for those who have been part of us in this community for a while now, you will understand how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns. And with this information, we can position ourselves in such a way that we can catch any potential move prior, during, and even after these events. And in fact, if we can do this very, very well, it will be quite easy for us to take an opportunity. And as technical traders, what we want to be doing here is to sniff out the current market structures and identify a tradable pattern that we can use to guide our trading activities ahead of these events. So right here on the economic calendar, we are going to be focusing on high impact events from the economic dockets that affects the assets we are looking at. So for today, Wednesday, August 2nd, we have only one high impact event coming in from the United States economic docket, and this is the ADP employment change. The employment change is normally released by the Automatic Data Processing Incorporation, and it is a measure of the change in the number of employed people in the US. Generally speaking, a rise in the indicator has positive implications for consumer spending, stimulating economic growth. So what this simply means is that a high reading is considered as positive for the US dollar, while a low reading is considered as negative. Now let's look at the previous data we have here. So looking at the previous data, we can see that we have 497,000, which is quite astronomical. And then we have economists projecting that the figures for the month of July is likely going to be around 189,000, which is a little bit on the downside, giving us an insight into the contraction in that sector. So what is it going to be like? So we are going to be waiting for the actual data, which is of course coming in about an hour or so from now, and we are going to look forward to what the actual data is going to be like. Will it be just as expected, below expectation, or even beyond expectation? But one thing we are going to be doing here, of course, is to try to anticipate and position ourselves in such a way that we can catch that move when it finally happens. So with that being said here, let's dive right into the business for today. And in fact, the first financial asset on our watch list for today is, of course, the USOILSPOT. Now, on the USOILSPOT, it has been quite an interesting 24 hours for us. Let's say 50 hours for us in this asset, as we have been buying since the beginning of this week. Now, let's run through how the week started for us here so that we can have a background knowledge of where we are coming from, so that we can properly anticipate where we are going to. And for those who are not part of our session, can have an idea of what really has been going on in our community. So at the beginning of the week, we saw our price action was trading above our key level for the week, which of course we identified at the $80 level. Remember, we identified this level on the higher time frame. Now, one thing we observed at the beginning of the week was how price action was initially confined between the $80.20 level and the $79.93 area to give us an insight into the level of indecision at the beginning of the week. Now, with this situation we had here, and you know how we do it in this community, whenever price action falls into this kind of range, we want to wait patiently for price action to give us a signal, which of course will come either in the form of the breakdown of the support line of the range for selling opportunities, or the breakout of this resistance line of the range for buying opportunities. And with the situation we had here, we had the buy position triggered, giving us our first buy position for the week. And prior to our live session, I was telling us that I already had a buy position triggered. And for those who missed out on that opportunity, we want to be looking forward to more opportunities at the breakout of levels such as the $80.50 level. And then we also had one at the $81 area. Then we also added more positions at the breakout of the $81.40 level, giving us a minimum of 3 positions to capitalize on that bullish move. So it was quite a very profitable start for the week, as we were able to scoop in over 200 pips just for the first two days of the week. And for those who have been part of this trading journey, well done to you for being on standby to have caught this move. Now, at this point in time, you must have been taken out of your position if you had moved all your stop losses accordingly, as we've always preached in this community, that when price action moves significantly well in our favor, we want to be moving our stop losses to lock in and secure our position. But if you still have a position running at this point in time, then I will be advising you to move all stop losses to secure your positions right now. So with a well-secured position, what is going to be our plans as we get prepared for the New York session today? Well, from the fundamental aspect of the market, price has finally broken out of that $80 mark, which has been the target of the OPEC Plus member since the beginning of this year. As you all know, the previous meetings and seminars they've had has been alighted with oil cut production just to artificially increase the demand, the global demand for oil commodity. And as you can see, price appears to have been above that area. Now the question going into today's trading session is that will this platform at the $80 mark continue to hold on to and continued uptrend continuation? Well, and also remember that we're anticipating the OPEC Plus meeting, which is coming up on Friday, which of course majority in the market is looking forward to. And one of the things people are saying is that there is a likelihood that there could be more oil cuts. So now let's look at the chart from a technical standpoint to decipher what could be our expectations for the New York session today. So the first thing I would like to do here is to scale up into the 4 hours time frame so that we can have an holistic perspective of what is really going on in this market, and for the sake of those who are not part of our live session, to at least have a peep into what we discussed at the beginning of the week. Now, looking at the structure here, right now we're on the 4 hours time frame where we of course identified the trend of the market since the beginning of last month. Now, the first thing we observe here is that price action has been very bullish, and to emphasize the strength of the buyers in this market, we were able to connect a series of higher lows here to give us these ascending trend lines. In fact, we have a couple of trend lines here which emphasize the strength of the buyers in this particular market. Now, you know how we do it in this community. When we have an ascending trend line, if price action remains above the ascending trend line, we of course want to remain patient and looking forward to opportunities to buy that asset. Now, with the situation we have right here, price is still remaining above the ascending trend line. Now, going into the structures we were looking at the beginning of the week was that $80 mark area, which we of course identified. And we said here that as long as price remains above the $80 mark, we are going to continue to look out for patterns and structures that will support the idea of buying. And one thing we noticed on the last trading day of last week was this breakout of the structure. So we were anticipating a potential retest of the structure to inside an uptrend continuation, which of course was exactly what happened as we took advantage of that move all the way to the upside. Now, with the way things are going right now, this ascending trend line is going to be a major parameter in guiding our trading activity for today. So what I'm simply mean here is that if price still remains above this trend line, we shall feel comfortable in our buy positions while we look out for more opportunities at the breakout of the $81.15 level. However, if price action breaks down this ascending trend line, then we are likely going to be seeing a sell-off that might bring price back into the major ascending trend line here, which of course shares a confluence with that key level at the $80 mark, probably to incite an uptrend continuation, or if a breakdown of that level happens, we will be joining a sell move. Now, with all these parameters and information identified on the 4 hours time frame, let's scale down into the 1 hour time frame where we shall be looking out for structures and patterns that we shall be using to guide our trading activity for today. Now, scaling down into the 1 hour time frame, this is the setup we have here, and of course has been helping us to guide our trading activities since the beginning of this week. Now, looking at the structure closely, you will see that as soon as price action tested that $82.15 level during the early hours of today, we have been noticing selling pressure resume in this market as participants look forward to the ADP employment change data coming in from the US economy. Now, with this situation here, is this going to be a retracement of the impulsive move we've been witnessing in the last 24 hours, or is this going to be the beginning of a sell-off in this market? Now, to help us guide our trading activity for today, and while I was trying to dissect what the market could likely say, I was able to identify a trend line after connecting the series of lower highs. And in fact, you do want to be marking out these trend lines on your chart, as you will be needing it as a reference point to guide your trading activities for today. Now, what this simply means is that we have no business buying the US oil spot as long as price action remains below the descending trend line. Now, let's talk about the potentials of buyers. Of course, price action has been bullish since the beginning of the week, so it's more reasonable to continue to look out for buying opportunity. Now, for us to take advantage of a buy opportunity here, this descending trend line must be broken to the upside. And one interesting thing about this structure here is the fact that the descending trend line also shares a beautiful confluence with the $81.75 level. Now, if we are going to be buying, we need price action to break out of that $81.75 level, which of course would have broken out of that descending trend line, and a breakout of the descending trend line will be a sign that this trend line may no longer be able to hold on to that bullish buyers in this market. Now, let's look at the structure closely. Now, for those who are joining this move for the first time this week, that is, if this is your first time taking advantage of an opportunity to trade the US oil, then I will be suggesting that immediately a breakout of this descending trend line happens, you want to wait patiently for a retest of structure to give us confirmations before we join that bullish move. And to do that, immediately breakout happens, just scale down to your lower time frame. It could be your 5, 10, or 15 minutes time frame, where you want to look out for patterns and structures that support the idea of buying this asset. And one of the things we are going to be looking at on the lower time frames are signs that sellers are finding it difficult to drop back below the descending trend line, which of course will reflect on the chart as continued buy pressure around this area for us to join an uptrend continuation. And if price action continues to find higher highs, leading into the breakout of the $82.15 level, which happens to be the highest point price action has been for this week, then definitely we want to be adding more position to maximize the potential of that bullish move. So this is how we are exactly going to be buying the US oil spot for today. So above that level at the $81.75 level seems most appropriate for buying opportunities at this point in time. However, for those who are already profitable on this trade, that is, you've scoped in a significant amount of profit this week, then you can afford to leverage on the profit you had made so far this week to test waters around the $81.75 level. So in that regard, you can have a buy stop order above that structure, and let's see if price action will continue to the upside. Now, don't forget that you'd want to have your stop loss in place. Very, very important, as every move you are making in the market is still an educated guess. So having your stop loss anywhere below the $81.40 level seems most appropriate, as you do want to give enough room for price action to breathe. So that will be dovetailing to about 40, 45, 50 pips thereabout, depending on where your entry is. So that is how we are going to be buying the US oil spot for today. Now, in as much as we talked about the bullish expectation in this market, let's take a quick look at the potentials that the sellers also have in this market. After considering the continued selling pressure we noticed around the $82.15 level during the early hours of today. Well, personally, I doubt if there's going to be any significant bearish move in this market, but if we are really going to see one, then I would rather want to see price action slice through that ascending trend line we identified on the higher time frame. Remember, this is the ascending trend line we identified, which of course has been supporting this bullish momentum in the last 4 to 5 weeks. Now, if I am going to be considering selling here, I would rather see price break through that trend line. Then at this point, we want to start considering selling. Now, remember, this is a counter trend opportunity, as a breakdown of that structure could be a false breakout. So you really need to be patient and wait for confirmation before joining that bearish move. And of course, a confirmation will come in the form of a retest of that ascending trend line, which of course is sharing a confluence with that descending trend line we identified earlier. Now, continued selling pressure around this area will be that significant signal you are looking for to join a bearish move to the downside. Now, remember, we have key levels like the $81 level, the $80.50 area, which could be an opportunity to maximize the potential of the bearish move if price action ever breaks down and retests those levels. Now, the TP target for the sell position could be somewhere around that key level at the $80 area, which of course shares a confluence with that major ascending trend line I showed you on the 4 hours time frame. So this is what we shall be looking at for the US All Spot for today. So you want to be marking out these levels on your chart. It's a very simple setup. So let me do a quick recap here and see. So for us to sell here, I have said that we need price action to slice through that ascending trend line. That is the first scenario. Then to buy, we want to see price action break out both the descending trend line and the $81.75 level to capture any bullish move. So our center of focus for today is basically between the $81.75 level and the ascending trend line we identified on the higher time frame. So these are my views here on the US All Spot for today. So if you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are going to be any questions, while you also use that time to mark out these levels on your chart. All right, so I see some couple of comments here. Let me say that. And okay, Yoni Prime, good morning to you. Glad to have you around. Val, good morning to you. Thank you very much. 40364 says hello everyone. Thank you for checking in on us. Thank you very much. Dino says thanks. You're welcome always. 40364. Okay. All right. Okay. I'll take that as a compliment, and I'm very grateful and thankful that you found them very useful in your decisions. You're welcome. 7342 is asking for explanations on X trend. I'm not sure what you mean by that, but if you mean what we do here, then I'll simply say that we come together here as a community in anticipation of the New York session, where we review the financial assets on our watch list and position ourselves strategically for trading opportunities during the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I think, I hope that's what you are asking for, but if that is not, let me know. Kindly rephrase your statement so that I can have a better understanding of what you're talking about. So Linz, hello Linz, how are you doing? This is my first time seeing your comments. I'm very sure you must be new here. Are you new? Let me know in the comment section. All right. So with that being said here, and in the absence of no questions as regards to my current setup, let's move right into the next financial assets on our watch list. So the next instrument on our watch list for today is the USTech100, popularly known as the NASDAQ. It has been quite an interesting 24 hours for us after a very slow start to the week, as we saw price action was caught within a consolidation phase, giving us a clue into the indecisive nature of traders at this particular point in time. Now, let's run through how the week started for us in this community. And so, at the beginning of the week here, the first thing we observed was that price action was initially confined within that range between the 15,810 level and the 15,690 level, giving us an insight into the level of indecision at that point in time. And considering the fact that price action has been very, very bullish in the last couple of weeks now, for those who have been with us since the beginning of the year, in fact, price action has been very, very bullish, and we were lucky enough to capitalize on those bullish momentum. And as a result of the bullish momentum we've been witnessing here in the last couple of weeks, I was of the opinion that we might likely be seeing price action break out of that resistant line this week. But unfortunately, that did not happen. So in order to position ourselves for that move, we actually looked out for buying opportunities at the breakout of the 15,750, which actually happened. And if you'd moved your stop loss accordingly, you must have been taken out at a worst case scenario break even on that single move. And during our live session yesterday, we had a new setup we noticed after citing selling pressure within that channel we identified. And to capture this perspective, we had connected a series of lower highs here, which gave us this descending trend line that we had here. And one of the things we had agreed during our live session yesterday is that as long as price action remains below that descending trend line, we'll continue to look out for selling opportunities. I think I have a network issue right now, so just give me a moment to switch my router so that we can continue with so hold on a second, please. Hello, everyone. Welcome back, everyone. I'm sorry for the breaking transmission. I had internet reception issues, so I had to switch routers so that we can continue the session. So please confirm in the comment section if you can see my screen and you can hear my voice. And if you don't, please let me know so that I can do the appropriate adjustment. But from my monitoring device here, everything seems very, very fine. But your feedbacks will be highly appreciated. So let's go back into the chart. So we were talking about the US Tech 100, how we were trying to position ourselves for trading opportunities ahead of the New York session yesterday. So I said here that we noticed that price action had been finding lower highs within that range, and then to picture that perspective, we connected the series of lower highs here to give us this descending trend line that you can see on your screen right now. And one of the things we agreed here yesterday is that as long as price action remains below that descending trend line, we have no business buying the US Tech 100. And to capture that bearish momentum, we said that we are going to be positioning ourselves just right below that support line at the 15,690 for that channel to join that bearish move to the downside. And of course, this is exactly what happened yesterday, as we saw a very strong bearish gap, and then price came back to retest the structure to give us that opportunity to join that bearish move to the downside. And for those who had captured this opportunity, well done to you for being on standby to catch this move, as we saw price action move over close to 200 pips in our favor before this bullish momentum began in the last 3 hours. So congrats to everyone who are taking advantage of this opportunity. Now that we are going, if you still have a sell position running at this point in time, you definitely want to be moving your stop losses accordingly to lock in some profit at this point. And if we look at the structure closely, I'm of the opinion that anywhere around this area seems most appropriate. So I want to go to as far back as last week's trading session, where we have a determinant factor of price action, which falls exactly around the 15,600 level, which is a strong psychological area considering the round figure of that price. So anywhere around this area seems most appropriate to lock in some profit while we wait and see how the market will be reacting to the zone. So with that being said here, with a well-secured position, what is going to be our plans as we get prepared for the New York session today? Now, first of all, I want us to consider what has been going on the 4 hours time frame, and especially for the sake of those who are part of our live session at the beginning of the week. So at the beginning of the week, this is what we observed. The first thing we noticed here is that price action has been very bullish since the beginning of the year. But not to bore you with the trading activities since the beginning of the year, I had to confine it to between the month of May and the present moment. And what we were able to see here is that price action has been bullish. And to emphasize that, we connected a series of higher lows here to give us an ascending trend line to work with. And as you can see, price has been respecting that trend line so far. But something interesting has happened here in the month of July, as we saw that despite price action testing a new high at the 15,950 level, we saw our price action has since then been finding lower highs in this particular market, to emphasize that we might likely be witnessing a retracement move, which could be as a result of key players doing what we call a profit-taking activities, which of course reflects on the chart as a retracement of the impulsive move that we've been witnessing so far this year. Now, with the situation we have here, let me give a visual representation so that you can have an idea of a graphical idea of what I'm talking about. Now, we saw how price action tested the 15,950. We saw price drop into the 15,350, and the inability of price action to break out of the previous high could be a sign that we might be in for a bearish momentum, which could be a retracement of that impulsive move. Now, in addition to this observation is the breakdown of this ascending trend line for the first time in a long time. So we finally saw the breakdown of this ascending trend line, which of course from a technical standpoint is a sign that sellers are gradually gaining momentum. Now, how do we confirm that this breakdown is not a false breakdown? Well, we would need price action to do a retest of the breakdown of the structure that was broken to incite a trend continuation to the downside. And from the look of things right now, it appears we're beginning to see some buy pressure resume around the 15,500 level in the last couple of hours, which could probably be a retracement of that impulsive move that started yesterday. So we might likely be seeing a situation where price will come back into the support to the ascending trend line, and of course that ascending trend line here also shares a confluence with that descending trend line, which has been supporting this bearish momentum since the beginning of this year, of this week rather. Sorry about that. Now if this situation happened, then we want to be positioning ourselves anywhere around the 15,700 to capitalize on a downtrend continuation. Now, that is one scenario we are going to be looking at. Then the other possible scenario here is price action could transition into a trend continuation pattern if it doesn't climb that far into this area. So it could go into a range something like this before we finally see a breakdown of that range to incite a trend continuation to the downside. So these are the parameters we are going to be looking at when we scale back down into the 1 hour time frame. So one of the parameters we are going to be using on the 4 hours time, on the 1 hour time frame, is the 15,500 area or 15,520, which I will be identifying on the 1 hour time frame. So back into the 1 hour time frame here. So the first thing we are going to be doing here is to acknowledge that 15,520 level, which I was showing you on the 4 hours time frame, which could be another opportunity to capitalize on a bearish move if price action does break down that level. So you want to be marking these levels out on your chart, and a breakdown retest of that level should definitely welcome more selling opportunities in this particular market. Now, like I was saying on the higher time frame, that we have noticed buy pressure around this area, which is the lowest point price action has gotten to this week. And if price action climbs up and break out, taking out our sell position at the 15,600, we are going to be looking forward to see how the market will be reacting to this level at the 15,690, which of course, remember, shares a confluence with both the ascending trend line and the descending trend line that has been supporting that bearish momentum since the beginning of the week. Now, depending on how price action reacts to this zone will determine if we are going to be joining a downtrend continuation or getting ready to buy the USTech100. So if price action begins to find selling pressure around this area, then this will be a sign that buyers are finding it difficult to climb above. Then a breakdown of the support line will welcome selling opportunities. So mark these levels out, set your alert on that level so that whenever price action gets into that area, you can monitor how the market is going to be reacting to that level to decide what your next line of action will be. Then on the contrary, if price action breaks out of the 15,690, a breakout of the 15,690 would also have broken out of that descending trend line. Let me show you here. Descending trend line here, it will have broken out that level to give us a signal that we might likely be going bullish. Now remember, we are not going to be getting too excited here, as we will need price action to give us significant confirmations before we join any bullish move. And this of course will reflect on the chart as price action retesting the structure followed by continued buy pressure. Then we can consider buying the USTech100. Now this retest of structure we are going to be looking at is going to be on the lower time frame. So it could be your 10 minutes, 5 minutes or 15 minutes time frame for this setup to mature. So these are my views here on the USTech100. So let's see how the market will play out going forward. And trust me, if you follow the setup we've identified here, definitely you will be positioned appropriately to capture any potential move in this market. So if you do have any questions regarding what I just explained here, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I'll be taking the next 10-15 seconds off to see if there are any questions, and then you can use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, I think it's high time I moved on to the next financial assets on our watch list for today. So the next instrument on our watch list for today is going to be the GBPUSD, and what an interesting and how will I call it? Let me see, an intricate setup this one is for us on this asset. So firstly, it is quite clear that we have been selling the GBP since the beginning of the week, as we saw price action break down very important levels that we identified during our live sessions on Monday and Tuesday. Then we also had a couple of trend lines here, which of course has been guiding our trading activities since the beginning of the week. Remember, we connected the series of lower highs here, which gave us this couple of trend lines, which of course we have been using to guide our moves. And of course, we agreed that as long as price action remains below that trend line, we have no business buying the GBPUSD, but continue to consider selling this instrument. Now, though we had a couple of stop losses at the beginning of the week, remember? So let me run through how the week started for us here in this community. So at the beginning of the week, we saw how price action was initially ranging, giving us an insight into the uncertainty in the market at that particular point in time. So we had price confined within the 1.286 and the 1.28450 level to give us an insight into that uncertainty. And you know how we do it in this community. We always look out for either a breakout of the resistance line or the breakdown of the support line for an opportunity to trade. But one thing that was peculiar about this structure on Monday was that price action was sitting on a very strong accumulation zone that we identified on the higher time frame. So for the sake of clarity here, I will quickly show you a snippet of what the 4 hours time frame was looking like on Monday, and this is what we have here. So this is the 4 hours time frame, and of course it's quite obvious that price action has been very bullish in the last couple of months in this market. I think since the beginning of this year it has been very bullish, and the fundamental factor that explains this bullish momentum is the inflation situation in the United Kingdom. I think at this moment the United Kingdom has the highest inflation rate in the major global economies in the world. And as a result of this high inflation rate, the Bank of England has deemed it fit to increase the interest rates to curb this inflation rate. And by increasing the inflation, the interest rate, you know what that means? That means if you invest in the pounds, then the yielding return is higher compared to the US dollar in this case scenario, which is about between 5.25-5.5% as at this point. So as a result of this, investors and traders have been investing and placing their bets on the pound sterling because of the high return that is expected on if you invest on that asset. Now, with the situation of things right now, it appears price is back into an accumulation zone, which we identified at the beginning of the week, and we said if price action stays above the accumulation zone, we are going to be looking out for buying opportunity. And technically speaking, the trading activities for this week, despite the fact that we have been witnessing bearish momentum since the beginning of the week, technically speaking, price is still within that accumulation zone. And not until the accumulation zone is broken to the downside that we can start considering a significant bearish move to the downside. So within this area where price action is still reasonable that we can still look out for buying opportunities. So let's go back into the 1 hour time frame. I just needed to show you what things are looking like on the higher time frame so that when I talk on the 1 hour time frame, you get to understand what I am saying. So like I was saying at the beginning of the week, we had this range, and because of the fact that price was above the accumulation zone, we had the buy stop order above the resistance line with the hopes that price action will break out the structures to find new highs. But unfortunately, we were taken out of that position in a loss to trigger our sell stop order below the 1.28450 level to trigger our first sell position for the week. And since then, we have been selling the GBPUSD as we rode the move all the way to the downside, added more position. Remember, we identified this level at the 1.28150 during our live session yesterday, where I said we are going to be capitalizing on the breakdown of that structure to add more sell position to our existing trade. And if you are taking advantage of that move, you will see from the first sell position, we saw price move over close to 100 pips on that single move. And for the second position at the breakdown of the 1.28150, we saw price move over 70 pips in our favor. So it was quite a very interesting position. Though we had a loss at the beginning of the week, we were able to recoup the loss and even add more profit on top of it. Now, I'm going into the New York session today. First of all, congrats to everyone who are taking advantage of that opportunity. Now, going into the New York session today, and while trying to dissect the current market structure this morning, I was able to identify a simple setup that I think we can use to guide our trading activity for today. Now, before we go into that, the first thing I observe here is that price action has been caught within a range, and that is between the 1.27980 and the 1.27480 in the last 22 hours now, giving us a clue into the level of indecision at that point. Now, secondly, in addition to that one, is the fact that price action has been finding higher lows in this particular market. Now, if you look at the structure closely, you will see that the lowest point price action has got into this week is that 1.27480, giving us a support level there. Then we have secondly, we have another higher low here, as you will see since the early hours of today, how sellers have found it difficult to break down the previous low. And when we begin to see higher lows on the chart, you know that we are expecting a bullish momentum, and this is a sign that buyers are gradually gaining momentum behind the scenes. And to further emphasize this, I was able to connect the series of higher lows to give us an ascending trend line, which of course is going to be one of the major parameters we are going to be using to guide our trading activity for today. And of course, you know how we do it. As long as price action remains above the ascending trend line, we want to be looking out for structures and patterns that will support the idea of buying that asset. Now, in addition to this whole structure here, if we take into consideration the impulsive move that started this week, you will see that price action appeared to be transitioning into what looks like a reversal pattern in the form of a double bottom structure. Now, when we start noticing that price action is transitioning into a double bottom structure, the next thing we normally do in this community is to identify a neckline which we are going to be using to guide, to validate that this reversal pattern has come to stay. So we have our neckline situated at the 1.27980 area, which we are going to be waiting for price action to break out of this neckline to give us a confirmation that truly we now have a reversal pattern. And one more interesting thing about this neckline is that it also shares a confluence with one of those descending trend lines that has been supporting this bullish momentum since the beginning of this week. Now, with the situation we have here, if price action breaks out of the neckline, it would have also broken out of that descending trend line, which would be a sign that the trend line may no longer have the capacity to continue to negate those bullish attempts. And this will be a beautiful opportunity for us to get ready to join a bullish momentum. Now, there are two ways through which you can take advantage of an opportunity above the structure. Well, from a technical standpoint, we expect to join only when a breakout happens. Then we scale down into our lower time frame to look out for a retest, confirming that this is truly a reversal pattern. Then we can join that bullish momentum to the upside. So that is one way you can capitalize on this opportunity, and this is suitable for those who are joining this GBPUSD trade for the first time this week. Now, for those who are already profitable on this asset this week, then you can afford to leverage on the profits you had made so far this week to take advantage of an opportunity there and test waters and see if this bullish momentum here is going to click. So what this simply means that you could have a buy stop order for those who are already profitable on the GBPUSD this week to test waters and see how far that momentum is going to go. Now, remember, you need to have your stop losses in place. Very, very important. And your stop loss could be below the ascending trend line or anywhere around those lows there where we have been noticing buy pressure since the early hours of today, which will dovetail to between 20 to 25 pips stop loss on this single move. So let's see how the market will play out. Will this bullish momentum become valid? Will this reversal pattern become valid? Well, a breakout retest of the 1.27980 will answer that question for us. So let's be on standby to capitalize on that opportunity if a breakout of this structure happens. Now, in as much as we're looking out for buying opportunities here on the GBPUSD, we cannot ignore the potentials of sellers too as well. As you all know how we do it in this community, we also want to consider the opposite direction. If it happens, we want to be on standby to catch that move. Now, if we are going to be selling the GBPUSD today, what do we want to see on this chart for us to join a bearish move? And don't forget that we have a descending trend line here, which of course is still containing this bearish momentum. As long as price remain below the bearish trend line, of course, we want to be looking out for patterns and structures that will support the idea of selling. Now, to sell this area here, I would rather want to see price action take out all the buy positions along the 1.27480 to give me a signal that sellers have come to stay and that we are going to be having a downtrend continuation. But I also consider that how can I capitalize on this bearish momentum before the breakdown of that structure happens so that I can milk in more profit if price action will go to the downside. So as a result of this, we are going to be using the ascending trend line as our guide for today. As you will see, a breach of this ascending trend line is likely going to be inciting a sell-off. So how do we capitalize this move? So the first thing I want to see is price breaking down the ascending trend line. First of all, remember, we are not getting too excited. We are not jumping in right away, as we will still need some confirmations to happen before jumping into any move. So as soon as we sight the breakdown of the ascending trend line, you want to be scaling down into your lower time frame. Could be your 5, 10 or 15 minutes time frame to look out for confirmation, which of course will reflect on the chart as a retest of the structure, where continued selling pressure there will welcome the selling opportunities we are looking for. Then we can have a sell stop order below the 1.27480 to maximize the potential of that bearish move. So that is how I intend to join any bearish move in this current market structure. So let's see what will happen prior to the New York session, and I implore us to be on standby to capitalize on this move. So all you want to be doing right now is to mark out this level, as this is the map we are going to be using to guide our trading journey on the GBPUSD for today. So if you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions. And before I move on to the next instrument on our watch list, and you can as well take your time to mark out these levels on your chart. All right, so in the absence of no questions, I want to assume that we're all on the same page here. So we shall be moving right into the last instrument for today. In fact, I'm already out of time, but I will try to squeeze this in as appropriate as possible. So the next asset on our watch list for today is my favorite, the XAUUSD, popularly known as the gold spot. So on the gold spot also, we have been enjoying some interesting trading opportunities here. We've bought at some point at the beginning of the week, and we've also sold to during the yesterday's trading session, which of course gave us significant amount of profit on both scenarios. Now let's quickly run through how the week started for us before we go into the details of what our expectation is looking like for today. So at the beginning of the week, we acknowledge how price action has been caught within that range. Of course, we saw lower lows and lower highs within that range, giving us a clue that sellers were very strong at the beginning of the week. But something interesting happened as soon as price got into the 1,953 to make us have a rethink of selling the XAUUSD, and that is the appearance of buy pressure around the $1,953.50 level. And because of the appearance of this buy pressure, we were thinking that if this persists, we are likely going to be seeing buying opportunity. And coupled with the fact that price action was sitting on that very beautiful ascending trend line, we had no business selling unless price action breaks down the trend line. And as you will see here, and because of the situation, we positioned ourselves just right above the $1,956.50 level to have our first buy position for the week. And since then, we have been maximizing the potential of this bullish move by adding more position at the breakout of the $1,960.40 level, the $1,093 level, and of course the $1,967 area. So we had a minimum of 4 positions on this one, milking that move all the way to the upside and scooping over 200 pips on all the multiple entries. And I do hope you moved your stop losses accordingly. And if you had done that, you would have been taken out before the sell pressure began yesterday. So personally, I told you that yesterday that I missed out on that sell position as I was thinking that this could be a retracement of the impulsive bullish move we witnessed at the beginning of the week. And in fact, during our live session yesterday, price action was at a very crucial confluence around the 1,956, which also shares a confluence with that ascending trend line. So I told us all yesterday that if we are going to be buying here, we want to be positioning ourselves just right above the 1,956 to capture an uptrend continuation where price would have respected the ascending trend line one more time to find new highs. And to capture that move, I had 2 scenarios. I said for those who are already profitable on the XAUUSD, we can leverage on the profit we had made so far this week to test waters around that area by having a buy stop order above that structure. And for those who are taking a position for the first time, we said we are going to be looking forward to a breakout, retest of structure before joining that move, which of course did not happen, but our buy stop order was of course triggered and we had our stop loss hit on that position, but we were still fine on all our positions on the XAUUSD this week as we saw price action break down the trend line, retested it to trigger our sell stop order, and price action indeed moved over 100 pips in our favor. So congrats to everyone who took advantage of this bearish move too as well. Now, going into the New York session today, what is going to be our plans and what are our expectations? Well, while I was trying to dissect this current market structure this morning, I was able to identify a simple setup that we can use to guide our trading activities for today. Now, the first thing I observe here is that in the last 20 hours, just like the structure we saw on the GBPUSD, price action has been consolidating, confined within that range between the 1,952 and the $1,943 level to give us an insight into the level of indecision in this market as participants anticipate the ADP employment data coming in from the US economic docket. Now, in addition to this range, I was able to notice that within the range we have been seeing higher lows. As we saw, the lowest point price action has been for this week is at the 1,943, and the next low here is a higher low, as you notice, giving us a clue that buyers are gradually gaining momentum behind the scenes as sellers are finding it difficult to find new lows, breaking down the previous low. And for me, this is a good signal that we might likely be getting ready for a bullish move. And one other thing that is the icing on this cake is the reversal pattern I was able to spot after considering this impulsive move. As you can see, price came back into the 1,952. We had a higher low, and look at what we have here, something like a reversal pattern. And you know, whenever we have a reversal pattern gradually unfold on the chart, the next thing we want to be doing is to identify the neckline, which we are going to be using to validate this reversal pattern. So we have a neckline situated at the $1,952 level, and of course, for us to take advantage of any trading opportunity or to validate this reversal pattern, we need a breakout and a retest of that structure to give us a confirmation that we are good to buy the XAUUSD. Now, this is a technical expectation, of course, but for those who are already profitable on the XAUUSD so far this week, we can leverage on the profit we had made so far this week to test waters around that area and see if price action will really be going to the upside. So having a buy stop order above the 1,952 seems more reasonable for everyone who has been profitable for this week. And for those who are joining for the first time, please note that you want to see a retest of structure before you want to capitalize on an uptrend continuation here. Now remember, very, very important, you must have your stop loss, very, very important. So your stop loss should be anywhere below the ascending trend line or the previous low, which will be dovetailing to between 40 to 45 pips stop loss on this one. So let's see how the market will play out going forward as we have our buy expectations just right above that zone around the 1,952 and the 1,953 area. Now, in as much as we're looking out for buying opportunities here, don't forget that we always consider the seller's expectations too, as well, as we also want to be on standby to capitalize on that move if that is what is going to be the case. Now, for us to join a bearish momentum, just like what we saw on the GBPUSD, a breakdown of the support line will seem most reasonable to join a bearish move. But how can we capitalize on that breakdown? By joining even before the breakdown happens. So since we already have an ascending trend line here, so we are going to be leveraging on this one as a parameter that will guide any bearish move. So you know that whenever price action remains above our ascending trend line, we want to feel comfortable in a buy position. But if price action breaks down the ascending trend line, then that momentum is about to shift. Remember, we are not getting too excited as we will need a confirmation before joining this move. So as soon as we sight the breakdown of the ascending trend line, we scale down into a lower time frame such as the 5, 10 or 15 minutes time frame to look out for confirmations that truly we are going bearish. And this will reflect on the chart as a retest of structure, continued selling pressure, then we can join the bearish move, and then we can have a sell stop order below the $1,943 level to capitalize and add more position to our existing trade. A very simple setup, isn't it, on the XAUUSD? So you want to be marking out this level as this is going to be our GPS to guide our trading activities for today. So these are my views here, and if you do have any questions regarding what I just explained here, just feel free to let me know in the comment section. And before I draw the curtain, I will take the next 10 to 15 seconds off to see if there are any questions before we draw the curtain for today. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, it has been a wonderful moment with you guys today, and I'm so grateful and glad to be with you and be with you through the session. And interestingly, we were able to take on all of the assets on our watch list for this week: the US All Spot, the XAUUSD, the USTech100, and of course the GBPUSD. So let's ensure that our positions, our setups mature before we jump into the trades. I'm very confident that with the setups we have on these assets, we can easily capitalize on any potential trading opportunities during the New York session. And for those who are joining us for the first time, you are highly welcome and hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us, the better you become in understanding how to use the information here to eventually trade on your account. So I look forward to seeing more of you again in this community. And on this note, I think I will just wish you all the best of luck during the New York session. And remember that we have the ADP employment data coming up in about an hour from now, I think. Yes, an hour from now. So let's ensure that we secure all positions, as the tendency of volatility prior, during, and even after this event is something we cannot ignore. So on this note, I wish you all best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well the instruments on our watch list have been doing, and at the same time get ready for today's trading session, which of course is going to feature a major event from the United Kingdom's economy, and that is the interest rate decision, which is going to be a very, very interesting and promising session. So I look forward to seeing you then. And on that note, do have a wonderful evening, everyone. Bye-bye.